Hello everybody, welcome back. We're going to have a little look at SHIB as we're still broken out of this descending triangle. It is still a technical breakout, and over the last few days the 200 simple, well it's almost there, and the exponential have crept out of there as well, adding more weight to the idea that we do pull back again into one of these two areas. That'll be a further 9, almost 10% drop to a 15% drop if we get those, and that would be Golden Cross retest complete on the daily. So that would be pretty significant, pretty epic. Now, outside of that, Hopium style setup. Actually, no, we'll continue with the Hopium. We've got the weekly 21 exponential still holding. So held last week, held again this week. Had a massive reaction from it a couple of months back as well. So there is something going on. We can still think about this in terms of maybe bouncing immediately. You know, there is always that chance. And remember what I've been saying, the dollar cost averaging has to begin somewhere. Can't assume that just because you bought somewhere it's going to be the absolute low. And the chances are we're going to consolidate or at least go sideways for, well, maybe a month or two, which has always been the main sort of idea, wasn't it, really? You know, thinking about this period in the market throughout the summer, always expected it to be pretty boring, if not heartbreaking. But, you know, it's held up better than expected, but creeping down offers nothing more than opportunity to buy back up. So I made that video yesterday. I'll leave a little link above my head at some point somewhere so you can watch that video on the total too, and what to expect from now until, I suppose, this point next year, really. Which is not, honestly, I'm not joking, nothing more than opportunity. You know, I repeat the same message I've done since December. You know, allocate positions. Last autumn, we were buying altcoins in October. Nobody wanted them. What are you doing, man? What are you buying that stuff for? Rally, 5, 10x's, standard. Selling sort of the beginning of this year, throughout the beginning of the year. Sort of playing some sort of little bounces here and there, but generally, mostly in cash. Still about 70% in cash at the moment, but I will certainly allocate a massive whopping 10% of my cash positions into alts if we continue to go down further, which, to be honest, we probably will, to be honest. Anyway, but looking at SHIB, there is a chance that this is the low. And what are you talking about? You're saying going down, but you could also say this is the low. That's right. That's right. Nobody knows exactly what's going to happen, but a Bollinger Band center is the 20 moving average. The 21 exponential moving average is also used in the form of crypto, especially when something's extremely volatile like SHIB, whoosh, all the way up. So it does require exponential moving averages. So they serve the same purpose as far as I'm concerned. 21 exponential, a 20 simple, they're more or less the same. And as we can see, to be honest, on this chart, specifically this chart, the simple really does count for something. So we're still there. So if you're going to have an entry point for SHIB, this would be it, and that's sitting down at all the zeros, 214, I just call it 21 flat. So let's take it back down to the daily, where we have these areas here, which is just below 2,000 and all the way down to 1,800. For our next entry points for this, if you want it. Now, there is a short signal on the Ichimoku cloud that was generated when the Chiku span broke down below the cloud here, as well as the price action and the red portion of the leading portion of the cloud here. So if that's the case, then that should take us down to the next major level of support on the daily, which would be one of these two. Exponential, probably, as we've established, the exponentials count for more than anything else. So that's a further 9% drop if we continue to nudge down from here. That's perfectly acceptable, because it was only at some point last week where I was saying that altcoins might be seeing a further correction of up to 30%, and I think you might even be looking at that 30% already. Really, let's just measure it from the breakdown of the 20 moving average there, 21 down to 28. So yeah, but, give or take 30%, which is what you'd expect on a coin like SHIB, which is high risk, high reward. So entry points exist at this very moment in time based on the weekly, down at these two levels on the daily. What's the 4 hourly saying, which is almost certainly going to be Rex City. Death cross, death cross, death cross, but we look like we want to reclaim this 4 hourly Bollinger Band as well, and the 21 exponential over here, and that might lead us into a death cross retest. First option would be the 50 exponential, then the 200 exponential, 2,400, and finally 2,450 45. So there's a lot of ground to make up on. This 4 hourly doesn't look particularly happy. Any divergence in play at the moment? Yeah, there is actually. We do have divergence in play. So there is a chance that we get that death cross retest from to cause on the short term at least another lower high that will take us down maybe to the areas that we've established on the daily, given the short signal that has been generated. So I'm not talking about leverage, I'm not talking about futures, so don't start trying to do that on a coin like this. This is a technical breakout from a formation. It's very common to see a breakout, retest the supports. The support on this would have been the 200 exponential or this horizontal. We haven't got any of those on the chart right now. So we are looking at a breakout for a retest either here or here, which should form a V-shaped recovery to the areas that were at least lost from the first sell order that we had after the first breakout, and maybe that's where we actually rally from. Given the weekly looking this way, if we do start to continue up and don't close a candle body below that 21 exponential, it actually looks good for when I say immediate continuation on the weekly. So that's not immediate. You know, you'll be watching this video saying, he said immediate based on the weekly. I checked my watch after watching the video and nothing moved. I don't understand this immediate. Well, I'm talking just formation. We don't want to see candle bodies close, you know, below that 21 exponential, which is basically, we'll call it 21. But if it does, then yeah, we're probably looking for a deeper dive, and it's that daily that should hopefully save us. If we start going lower than 1850, there's a bit of a problem really, but and you know, and when I say problem, I mean an actual problem, because you know, if you want a dollar cost average into something like SHIB at that point, then you should be thinking about a lot lower. So areas down at 17, maybe even all the way down to 14. So it could get pretty nasty before it turns around. But at the moment, the breakout is still there. It's just offering potential drops into these areas before it springs. And there might not be a spring, but based on the 4 hourly, I think we should be looking for, this is going to be a controversial statement, a death cross retest on the 4 hourly. So that might mean an immediate move before we go down any further of around 10 to 12% maybe, you know, before we see anything. So I think we would be looking at a bounce up before a rejection down, and then that rejection down takes us down to these lower levels where we find a possible reversal at that stage, and that'll be pretty sweet, to be honest with you. So nothing more than an opportunity in waiting, whether you want to try and play the shorter term time frames, and if you are looking to do that, I imagine you're a trader already and you're not watching this video and you've already got that setup ready and waiting. And if you're not a trader, or if you're learning, which is fine, you know, or if you're waiting for a longer term opportunity, then it's these lower levels that give you the last stage of pullback before a potential reversal, just based on major supports and the technical breakout and a retest of the support after the breakout. So I think there is a very good chance that we see something like this, you know, bang and then up, and then maybe if we break out from here, bang all the way up, and that could be it. You know, that could be where we really do start to see the full reversal. We won't be going left, but we should be going up. And so I think there's a very good chance that we do take out this all-time high at some point over the next couple of years. But trying to allocate positions, you know, appropriately, the best thing to do is to do it bit by bit, step by step. And if you're immediately bullish, you are looking at this area here over the next couple of weeks as the moving averages sort of get up, and they do diverge because we're above them. You know, we might be looking at either something like that and then up. So, but immediately, as of this very moment in time, the 4 hourly is teasing us with the idea of a breakout and a retest of the death cross, which is nothing more than a bearish formation. It's a buy the dip to sell the rip, really, and it's only a 10% rip, and the risk to reward isn't great because we've got 10% target for downside, 10% target for upside. It's a 50-50 trade, really. You know, that's not good risk to reward. I much prefer the idea of buying lower based on the daily, and then holding for a much bigger move up over time, which I think is probably more likely, to be honest with you, and less risk. Not devoid of risk, but less risk, because the returns are higher than the losses if it comes to that. Right, I'll leave it with you there. Nothing much more to say. Feel free to join me on the Patreon live stream tonight. Links in the description below. Other than that, I hope you have a nice day. Take it easy.